Good evening to you all, and welcome to SC Securities presentation this week. Let me start with the market highlights, and then I will move on to look at some key economic highlights and some important news and insights from global commodity markets and international financial markets are also expected to present today as usual. So starting off with the market highlights, market managed to continue its bull run from last week. So during Monday's trading session, ASPI gained 188 points to close at 9,813.18, whereas S&P SL 20 index gained 25 points to close at 3,156.64. So during the day, turnover picked up to report a value of 4.7 billion, and foreign purchases also picked up to 237 million over 184 million to result in net inflow with the aid of Expo. However, during Tuesday's trading session, market witnessed some sort of a decline in terms of both the indices. So during Tuesday's session, ASPI declined by 62 points to close at 9,749.909, and S&P SL 20 index also lost 23 points to close at 3,133.15, and that was basically due to retail selling amid profit taking. That was a slight contraction or a temporary contraction. But anyhow, turnover reported a value of 3.7 billion. That was declined or lesser value compared to that of previous day. But anyhow, that was even a higher number compared to that of this year's daily average turnover. And on a positive note, foreign purchases reported again a net inflow with total foreign purchases worth of 152 million over 43 million worth of foreign sales. From Wednesday trading session onwards, during Wednesday and Thursday sessions, SPI and S&P SL 20 index, both the indices continued to perform and they bounced back to positive territory. So during Wednesday's trading session, ASPI gained 165 points to close at 9,914.92, whereas S&P SL 20 index gained 46 points to close at 3,179.79. So we have seen increased or improved investor traction in the counters like banks and hotels with some positive expectations and positive news. So this rally managed to gain in terms of both the indices. And during Wednesday's trading session, turnover reported a value of 4.1 billion, and that was higher than the previous day's turnover of just 3.7 billion. And foreign purchases also notably pick up to report a value of 831 million over 157 million, and that even aided by Expo's foreign buying by its parent. And during Thursday's trading session also, the positive momentum was continued, and as a result of that, SPI gained 158 points to close above 10,000 benchmark level, actually at 10,072.38, and S&P SL 20 index also gained 72 points. The most liquid shares gained 72 points to close at 3,252.23. So during the day, turnover significantly picked up to report a value of 5.3 billion, and that even aided by exposed foreign buying, which boosted foreign purchases to an overall level of 1 billion just for one day, and only 277 million worth of foreign sales reported. So altogether, it resulted a net foreign inflow for the day. And however, during Friday's trading session, both the indices witnessed slight drawback. So accordingly, SPI lost 11 points to close at 10,061.09, whereas S&P SL 20 index also lost 14 points to close at 3,237.32. But anyhow, turnover picked up with the aid of Expo and its foreign buying. So with that, turnover level reported a value of 5.34 billion, whereas 1.8 million worth of foreign purchases were reported against 62 million worth of foreign sales. So altogether, ASPI gained or moved up by 3.68% for the week, and S&P SL 20 index also gained 3.39%, whereas net foreign inflow was reported. With the foreign participation, net foreign inflow was reported, and that was a value of 3.4 billion. So, looking at the Treasury yields, as most of the parties expected, the Treasury yields likely decline. So, as accordingly, 3-month yield declined by 18 basis points from 32.89% to 32.71%, and 6-month yield also declined by 46 basis points to 30.82%, and 12-month yield also declined by 24 basis points to 30.26%. So looking at the spot rates, LKR was slightly depreciated against US dollars and Japanese yen, but anyhow, throughout the week it resulted sort of an appreciation against Great Britain pounds and euro. So, looking at the key economic highlights for this week, the long awaited legislation came into effect. So, the Sri Lanka government has gazetted new legislations to legalize and regulate casinos. With that, the qualified applicants who have fulfilled the required qualifications are welcome to enter into casino and gaming business, and all these activities will be controlled by Casino Business Licensing Regulation number 1 of 2022. So, a slow outline procedures in terms of regulating casino business from a vast array of aspects, from application to cancellation. Vast array of area will be covered by this regulation, and this is actually a long awaited news for tourism and leisure sector, especially the John Keel's Holding Cinnamon Life project welcomed this news, as they were long waited in a queue to get the required license, and Port City is also having same interest. So with that, they are going to enter into casino business very soon after granting the license. And the intention of in provisioning this kind of a legislation is to reform Colombo as an entertainment hub in South Asia. So this news was welcomed by majority of the participants in tourism sector. We have seen most of the hotel counter stocks picked up during the latter part of the week after this news, and even with that, the tourism sector participants are expecting tourist arrivals to pick up in the winter season, because the energy costs in European region are very hard to bear. So it's comparatively cost effective for them to have them to come and spend their vacation in a country like Sri Lanka. So with this, the tourism sector participants, the leaders are expecting a bounce back in tourism sector after 2018. So in tandem with that, the Japan also recently declared that they are going to waive of some of the visa requirements to boost tourism in the Japan. So Sri Lankan authorities too have to closely monitor in order to get this opportunity, to get the maximum benefit of this opportunity, and waive off some sort of requirements to boost tourism sector as a mode of reforming Sri Lanka's foreign exchange position. So apart from that, the Census and Statistics Department of Sri Lanka has reported that Sri Lanka economy has contracted by 8.4% during the second quarter of the year 2022 on the back of a negative growth of 1.6%, and the agricultural sector has reported a contraction of 8.4%, and the industry sector also resulted a decline of 10%, with having a reduction in services activities of 2.2%. So altogether, economic activities have been slowed down with the power outage and with the fuel shortage and all sort of shortages that had prevailed in the country, and with the supply chain disruptions and all, these have all negatively affected on declining economic activities in Sri Lanka. And so the at current prices, GDP was valued at 5.37 trillion, and that was an increase compared to that of second quarter 2021 GDP, which was worth of 4.03 trillion, and that was basically due to the inflationary effect. But anyhow, the GDP at constant prices during second quarter 2022, it was just 2.78 trillion, whereas during 2021 it was 3.03 trillion. But the said 2.78 trillion for the second quarter this year was higher than the 2.61 trillion in the second quarter of 2022, which the economic activities has taken place at a lower base during 2020 with the effect of the global coronavirus pandemic. Uh, and those are the basic points from Sri Lankan economy. Then let me move into look at some commodity highlights and international market highlights. So all the commodities declined for the week with worsening recession fears. So during the week, oil prices also declined with Federal Reserve's rate hike expectations and the possible chance of experiencing a global recession that would impact on declining the oil demand. And gold prices also resulted a two-year low with mounting concerns on Federal Reserve's rate hike and all these recession fears. Aluminium prices and copper prices also declined for the week, and aluminium has continued to face production cuts with the European region's power crisis. And the same reason, the Federal Reserve expectations regarding rate hikes has negatively affected on international financial market as well. So most of the markets ended up with losses, and they waived off majority of their gains for the week with the recession fears and expectations for aggressive rate hikes, and the gloomy outlook that was given by the World Bank, coupled with IMF's negative projections, has caused most of the world stocks to ended up with weekly losses. So Indian market shares also follow the same trend from Wall Street and European region. They also ended up with weekly losses, especially with the price decline in technology and automobile shares. And meanwhile, China's property market data for the month of August has reflected a worst situation, and that has been a cause to rise deepening concerns regarding a major contraction in the world's second largest economy. So these are actually the points that I got to share from my end regarding the commodity markets and international front. So the international front first, when we look at the international market, it's clearly evident that the world is heading towards a recession. So there can be continuous supply chain disruptions and all. At the same time, we as a country should look at the positives and the opportunities that we could grab to get the maximum benefit. So with that concluding thoughts, I would like to hand over the presentation to Harin. Over to you.
Thank you, Sachini. So looking at US oil during this week, the price has actually tested the daily resistance 1992 and failed to break that key level where the price is actually standing below the level of the daily resistance 1992. And we were able to see how the price got retraced from the daily support 8082 and then got rejected from the daily resistance 1992. And still the price seems to be quite bearish as the dollar is appreciating, and most of the commodity prices are actually declining at the moment. So if it continues to decline, we might be able to see testing the daily support level 8082, and further breaking that key level. We have 76.95, which I have taken. So this key level which I have taken is actually 6th July 2021 high. So that's 76.95 US dollars per barrel. So we might be able to see it testing that level after initial breakout below the daily support level 8082. And further breaking that key level would be the next daily support that we have 7072. So in case if the price actually uh, retest makes a successful retest at the level of daily support of 882, we might be able to see touching the declining trend and breaking above that key level. We might be able to see it reaching the daily resistance 1992, but the worst case scenario, it could actually drop to the level of 8082. So that's my initial update on US oil. The price seems to be actually trading below the moving averages as well, so therefore it clearly indicates a bearish momentum at that in this case as well. The RSI is in the mid range 40, which is 42, and so this clearly gives us an idea overall the market is actually was declining over the period of time now. So this daily support level is acting as a strong support level at the moment, as the price got rejected on 8th September 2022 as well. So price will anyways continue to decline to the daily support level 8082 long as the price sustains below the level of 85. So that would be the initial update on the US oil. Looking at our OSHA index, what we can clearly see is this is the weekly chart. So the weekly RSI console level of 62.38, and at the same time the daily RSI console level of 80.47. So in the weekly chart, we can clearly see that there is a weekly resistance at 10,050, 10,250, and also 10,000 being a very strong psychological area. So from the weekly chart perspective, if the index manages to break this weekly resistance 10,050, 10,250, we might be able to see it reaching the level of 11,000, which is the next psychological area. And further going ahead, we have the next weekly resistance at 11,450, 11,650, which I have taken because in 2022, beginning of 2022, February, we had a small retracement. After breaking that key level of support, we had a retracement, and the index fell, declined below 7,250, that key level of weekly support level. And then we had some sort of a accumulation over a period of time over here during these weeks, and sudden breakout above this weekly resistance, its previous weekly resistance, which now is actually a weekly support level. We were able to see how the index actually went to the level of 10,050, 10,250. So during this week, we were able to see how it made a high of 10,176.5, and we have a wick over here, which made a high and managed to close at 10,061.1. With that being said, the moving averages, of course, indicates a bullish momentum overall, since the index is trading above both the moving averages. Previously, when we were able to see that when the index was actually trading below the moving averages, we had a sharp bearish declining momentum, whereas now we have a bullish momentum as the index is now trading at a weaker resistance. So keep an eye on this area. If the index manages to break this 250 area, we might be able to see it heading towards 11,000. Else, we might be able to see from the daily chart perspective, we might be able to see it coming towards a level of 9,600, as the 200 moving average is acting as a support at that key level area. So worst case scenario, rejection from this 10,050, 10,250 level could initially bring down the index to the level of 200 EMA, which is acting as a strong support level at the level of 9,600. And also the RSI is quite overbought from the daily chart perspective. RCL, which is our topic of the week. RCL from the daily chart, we have it. We have the RSI at 68.35. With that being said, we have a high overall structure high formation recorded on September 12th, which is 43.6. And if it manages to retest that area, test that area again 143.6, breaking that key area, we have the daily resistance of 45, 46, and go and further we have the next daily resistance as 53, 54. Rejection from the structure high formation recorded on September 12th, which is 43.6, would initially bring down the price back to the daily support level 37.38, but overall the price seems to be inclining as the price is actually trading above both the moving averages, and we have the 8 moving average acting as a support again, and also 8 moving average is actually at the daily support level 37.38, and as you all can see the price when the price came to the level of daily support 37.38 and also to the level of 8 EMA, we were able to see how the price actually got rejected from that key area, and now seems to be quite inclining towards the level of 43.6. So that's the overall update from my end, because looking at the moving averages also, we can clearly see when previously when the price was actually trading below the moving averages, we had a sharp decline in momentum. As for now, when the price is actually trading above the moving averages, we do have a bullish momentum. So that's clearly it from my end. Thank you for watching this video. Please do like and subscribe this video and have a wonderful weekend. Thank you very much.